You're at the grocery store checkout. The total flashes $247. Didn't I just buy groceries 3 days ago? This is the moment most Americans are living in right now. That sinking feeling when the math just doesn't add up anymore. But here's what nobody tells you. You're not imagining it. What used to be normal is now a luxury most people can't afford. Hi, I'm Fred, and today we're exposing the shocking financial reality of the average person in 2026. And I guarantee at least 3 of these stats will make you rethink everything you thought you knew about money. If you're serious about getting your money under control and building real wealth, hit subscribe and like this video. Part 1, the savings crisis nobody's talking about. 80% of Americans didn't save a single extra dollar throughout all of 2025. Not $1. After a full year of working, paying bills, and trying to get ahead, 4 out of 5 people ended the year in the exact same spot they started. Your coworker sitting next to you, your neighbor, your college roommate posting vacation photos on Instagram. Statistically, most of them added nothing to their safety net. But it gets darker. 1 in 4 Americans has 0 emergency savings. Absolutely nothing between them and disaster. That means 25% of people you know are 1 car breakdown, 1 medical bill, 1 surprise expense away from complete financial collapse. And here's the kicker. About 1/3 of Americans now have less emergency savings than they did at the start of 2025. They're not treading water, they're sinking. Most Americans never even get to $10,000. This isn't resilience. This is financial quicksand. Part 2, your income matters more than your latte. Here's something that'll make the budgeting gurus angry. People who increase their emergency savings were almost 4 times more likely to report higher incomes. Meanwhile, people whose savings went down were far more likely to say their income dropped. Translation: you cannot budget your way out of an income problem. Sure, cutting out your $6 daily coffee adds up to maybe $2,000 a year. But when your rent jumped $300 per month, your car insurance went up $80, and groceries cost 30% more than 2 years ago, that coffee money is a rounding error. The uncomfortable truth is this: if wages aren't keeping up with your cost of living, no amount of spreadsheet wizardry will make those numbers work. According to the Bureau of Labor Statistics, median weekly earnings for full-time workers hover around $1,000, which is roughly $52,000 per year before taxes. After federal taxes, state taxes, Social Security, and Medicare get their cut, you're taking home maybe $35,000. Now try building wealth on that when the average household spends $67,000 per year. The math literally doesn't work. Part 3, the debt-death spiral. 1 in 3 Americans now has more credit card debt than savings. For every 3 people in your life, 1 of them owes credit card companies more money than they have in the bank. The average household is carrying over $9,000 in credit card debt at interest rates of 20% or higher. That's $1,800 per year evaporating into interest payments alone. Money that could be building your future is instead making banks rich. And here's what makes this truly insane. Less and less people have even $1,000 saved for an emergency, yet more people are saying they'd have to put a $1,000 expense on a credit card and pay it off over time. This is how financial stress starts. First, you lose your savings buffer. Then you build up debt. Then the interest compounds. At that point, even a small emergency, a $600 car repair, a $400 medical bill can push you into bankruptcy. And people are doing this right now. Bankruptcy filings are rising, car loan delinquencies are rising, mortgage delinquencies, student loans, credit card delinquencies all trending up. Part 4, emergency funds aren't for emergencies anymore. About 1/3 of Americans tapped their emergency savings in the past year. But here's the disturbing part. Most of it wasn't used for actual emergencies. It was used for rent, utilities, and groceries. That's not emergency spending. That's survival spending. When your emergency fund becomes your grocery fund, you're not preparing for disaster. You're already in one. Most financial experts say you need 3 to 6 months of expenses saved to feel secure. 60% of Americans say they're uncomfortable with their current emergency savings level. Only 46% actually have 3 months saved. Only 27% have 6 months. The gap between what people need and what they have is massive, and it's growing. What's one money decision you wish you'd made 5 years earlier? Drop it in the comments. Part 5, the retirement reality check. Let's talk about something most people avoid until it's too late. According to the Federal Reserve's most recent survey, The median amount Americans have saved for retirement is $65,000. But 25% of Americans don't even have a retirement account at all. 1 in 4 people you meet is planning to rely entirely on Social Security, assuming it even exists by the time they retire. For those 65 and older, the median retirement balance is around $88,000. If you follow the traditional 4% withdrawal rule, that gives you about $3,500 per year, less than $300 per month. Could you live on $300 a month in retirement? That wouldn't cover groceries and utilities, let alone healthcare, travel, or actually enjoying life. The average Social Security benefit is around $1,550 per month. Add that to your $300 from savings, and you're looking at roughly $22,000 per year to live on. Real quick, most people will never see these numbers. They'll keep scrolling, keep wondering why they're struggling, and never connect the dots. That's why I need you to like this video so it actually reaches them. You could be the reason someone finally gets it. One click makes a difference. Part 6. The real reason everyone's struggling. 75% of people report that the economy itself has made it harder to save. Inflation, interest rates, the job market, everything is working against you. Yes, inflation isn't rising as fast as it was in 2024, but prices never came down. They're still climbing from that elevated base. The average American household now spends $5,577 per month, which adds up to about $67,000 per year. Housing alone costs $1,885 per month, over $22,000 annually. Transportation eats up another $913 per month. Food costs $691 per month. Before you've paid for insurance, healthcare, or had any fun, you've already burned through most of your paycheck. And Americans are only saving about 6% of their income after taxes. 6%. If you're saving 6% and some of that needs to go towards shorter-term goals, there's almost nothing left for long-term wealth building. Part 7. What this means for you. These statistics reveal something crucial. The average person's approach to money isn't working. When typical Americans have less than $90,000 saved for retirement, carry $9,000 in credit card debt, and can't handle a $1,000 emergency without going into debt, something is fundamentally broken. But here's the truth. That should motivate you, not discourage you. Once you know what average looks like, you can make informed decisions about whether you want to be average or better than that. And doing better than average doesn't require genius or luck. If you're consistently saving more than 6%, you're already ahead. If you're avoiding credit card debt, you're way ahead. If you're actually investing for retirement on a regular basis, you're lapping most people. The bar is set low. Beat the average by a little bit in multiple areas, and the compound effect over time becomes massive. Earn slightly more than $52,000. Save more than 6%. Avoid credit card debt. Invest consistently. Do these things, and you'll retire with significantly more than $88,000. These statistics show where the average person ends up, but they don't have to define where you end up. Use them as a starting point, not a finish line, because the choice between average and extraordinary comes down to what you do next. I've picked out another video for you. Feel free to click here and continue watching.